Hello friends, welcome back to my channel. I'm taking a look at Nifty on weekly chart, and as you know, Nifty has closed the week at 22,519 last week, and that is on Friday, and today we are on Sunday. So I'm giving you view for next week or two. Okay, so coming 1 or 2 weeks, this view should be valid. If you look at the last 4 or 5 weeks movement, it has been a choppy ride for Nifty as such, and the fall that we had seen from around 22,500 that was arrested subsequently at Fibonacci level, and then there was a rebound. So since there was a fall at around 22,500, obviously it was a resistance, and last week it had formed around doji, not doji, a spinning top kind of pattern on the weekly chart. This week we have seen the index as expected tried to move up around 300 points. It moved up, but then it could not sustain. In the end, it has closed right very close to the opening level, slightly below that, and in the process it has formed something called shooting star. Now, shooting star is a pattern which is generally found in at around say top, and currently what we are seeing is the support and resistance Fibonacci levels, etc. Those that were mentioned last week are still valid. So from the current level of 22,519, which is barely about 22,500, which was a critical level for Nifty for the last 6 to 8 weeks. That has that is expected to act as support here, and then below that there is a support of around 22,387, and below that we can see lots of like choppiness that we had seen earlier. So around 21,900 could be support, 21,700 could be support. So all these supports are in place. Now, what is different this week is this, despite the fact that it is actually closed above 22,500, it is like the shooting star is indicating possibility of choppiness and maybe possible slide also. Now, if you combine this with the geopolitical tension that has been created because of Israel-Iran possible conflict, then it means that it can very well come down to the support levels mentioned here. So be cautious for the coming week, and any rallies, if you go to see, don't trust those rallies. Since we have election also, we can see some buying interest on dips. But be cautious. Some people in such environment, what they do is they actually reduce their positions if the geopolitical environment gets affected. So that is a viable proposition. Then you can possibly wait for deep and then try to take advantage of those deeps. However, if this conflict doesn't materialize, then there will be there is expected to be a sideways movement in coming weeks. So that's the view. So upside looks to be capped. So those who want to be like aggressive on the options front can think of selling 22,900 call, and those who are slightly defensive want to sell spreads. Those can sell spreads of 22,900 call bought, and 23,200 call sold. So those things can be done on the upside. On the downside, since there is a possibility of swift fall also because of geopolitical tension, one would advise at this stage to have um, buy on dips strategy only when dip materializes and there is like some consolidation at the end of it. So if it touches say let's say critical level of say 22 135 or 21,700, There you can selectively buy into fundamentally sound stocks. So that would be my advice. And if we see that the conflict doesn't materialize, then it is expected to move sideways, because anyway we are having election in front of us. So election in front of us meaning another 1 to 2 months, 3 months, nothing much would happen on the market side, and there would be sideways movement. So that's the view at this juncture. So be there, be there as a trader, be there as an investor. Trade with the strict stop loss, and for investing, we should have buy on dips as a strategy. So that's about it, and I'll see you next week. If you like this kind of clear, crisp views, then you should subscribe to my channel, like and hit the notification button, and share the videos, recordings to your friends of various other social medias. So that's about it. Thanks a lot for watching. See you next week.